Hi everyone, Joe Vitale, American Retirement Advisors with the Gradient Investments weekly talking points for the week ending September 3rd, 2021. Let's get into some stocks. U.S. equities moved higher again last week with the S&P rising 0.62%, the Russell advanced 0.68%, and the Nasdaq gained 1.57%. Now the overseas markets were stronger for we don't see this all the time, with the EFA rising 1.8% and the emerging markets up 3.42%. Now, growth stocks outperformed value stocks in the U.S. as defensive sectors like real estate, healthcare, and staples outperformed cyclicals, which were like financials and energy and materials. So let's talk about some fixed income. Bond yields rose and values declined following Friday's job reports that was far below expectations since the timetable for tapering by the Federal Reserve has been pushed out from perhaps September to now perhaps November. So recall that the Fed has been buying $120 billion worth of bonds monthly in an effort to stimulate a return to full employment, and that they plan to reduce or taper those purchases when and if full employment is detectable. Now, meanwhile, bond values have been holding up relatively well since the Fed chair separated taper timing for the rate liftoff timing, which basically the 10-year bond yield edged up 2 basis points to 1.33%. Commodities gold, which is a precious metal and an ETF endowment series holding, rose as the U.S. dollar weakened last week, particularly after the disappointing employment report. Now, that included higher labor inflation. Overseas, the Eurozone reported a 10-year high for inflation of 3% in August, also driving demand for gold as a storehouse of value. Now, the price of gold rose 0.75% for the week to close at $18.39 per troy ounce. Let's talk about the economic news. We talked a little bit about the jobless number, the jobless claims. We're at 235,000 new jobs in August. The employment report was sharply lower than the consensus estimate of 720,000, which because of the stimulus, they're still paying people not to go to work, and that's what happens, right? And a sharp decline from the prior month. Employment for the prior 2 months were revised higher by 134,000, somewhat mitigating the risk, but as the unemployment rate moved 0.2% lower to 5.2 month over month, the average wages rose 4.3% year over year. I think we're going to see that change soon as the extra unemployment checks will be stopping soon. So I expect to see that we're going to see an uptick in the numbers of new jobs and a lower unemployment rate real soon. Further, we're getting into the fourth quarter, so look at the holiday season. It's going to be they're going to be hiring. We're going to see a lot of seasonal jobs coming. So I think the biggest issue is going to be finding some good people, right? We're going to see a big demand now, which means what is that going to mean? We're going to see wages go up. What is that going to mean? We're going to see goods and services go up. And depending what the supply is, we're going to see the demand supply. So we're going to see, what are we going to see? Inflation. It's inevitable. It's not transitory. Some of it is transitory. We keep talking about this. But with the higher wages, with the higher demand, with the lower supply, we are going to see inflation. Okay, let's talk about the service sector. Registered 61.7%, 2.4% lower than the all-time high reading of 64.1 in July, but still indicating the 15th straight month of growth for service sector. Now, note, any reading above 50 indicates growth. The tight labor market, material shortages, inflation, and logistics issues continue to cause capacity restraints affecting growth, right? Look at home prices. Still surged 18.6% in June on a year-over-year basis, the highest rate in more than 30 years, and the 13th consecutive month of accelerating prices. For the 25th straight month, Phoenix led the way again, the 20th largest cities with a 29.3% annual gain, followed by San Diego, which posted 27.1% year-over-year increase. How about some company news, things that we look at our portfolios, right? Look at American Tower Corp, AMT, and Digital Realty Corp, Digital Realty Trust. Both G50 holdings rose 5.78 and 4.6% respectively, as the real estate investment sector rose on rising interest rates, and the data center subsector attracted more investors to lower risk property types. Canadian National Railway, CNI, which is a G40 holding, rose 15.29% in a relief rally that their potential acquisition of Kansas City Southern Rail has been terminated. So the Canadian government board banned the combination. As a result, their stock went up 15%. Verona Systems and ServiceNow Inc., both G33 and Core Select Holdings, rose 9.87 and 7.31% respectively, and continued strength in the enterprise computer security software stocks. And you're going to see that a lot. Now that's it for today. Thank you so much for being part of our ARA family. We're very thankful for you. And of course, if you have any questions, give us a call at 855-756-5700 or reach out at aradvisorsinc.com. God bless you. Thank you. Have a good week. We'll see you next video.